Did you know that property taxes in Texas are some of the highest in the country? So it's incredibly important that you know how they work. In this video, I'm going to be covering everything from how property taxes work in Texas to exemptions you need to know about, and even covering specific tax rates in the Aledo area. So stick around and let's make sure you're giving the government as little tax money as possible. Okay, so like I just said, Texas does have one of the highest property tax rates in the nation. It is actually ranked at number 5, I believe, out of 50. So it's up there. And the primary reason for that is that we do not have a state income tax. So people kind of fall on either side of that category, but I really prefer it this way. I am happy to not have a state income tax and let my property tax kind of be set based on what I want to buy and can budget in for. Stick around to the end of the video because we are going to cover specific tax rates in different areas of Aledo ISD, starting from the most expensive tax rate down to the lowest tax rate. We're even going to touch on a city that does not have any city property taxes. So let's get rolling. Okay, well, to get started, I'm going to give you an overview of how property taxes work in Texas to help lay the groundwork for some of the specific information I'm going to be covering after this first section. And the very first thing I like to tell clients, especially who are moving from out of state, is that Texas is what's called a non-disclosure state, which means sales prices are not publicly available. And so the county and the taxing authorities don't always know exactly what you paid, which is good. And so the counties actually rely on two different things, which I'm going to explain in a moment, to help determine what you actually pay. So first, you have your market value according to the appraisal district, which is not always what your home would actually sell for, but it's what they think it would sell for. The second thing is your assessed value. And again, we're going to explain the differences in these, but you have the market value per the county and you have the assessed value per the county. So I already said that the market value per the county is what they think it would sell for. Well, the assessed value is what they apply the tax rates to. And we'll talk about tax rates at the end of the video. So the assessed value is what really impacts your tax bill. And so that's important to know that you're going to see two different values on your tax bills most of the time in Texas. So now, who handles the taxes in Texas? And really it comes down to a county level and then smaller taxing authorities underneath. But first, you have your county appraisal district, and this is the group that is typically responsible for setting your values, your market value and your assessed value. These are the people you go in to argue with and fight that value, which we're going to be talking about at the end of the video as well. And then you have your tax assessor collector, and this is a separate group, and they are the ones responsible for collecting those taxes and charging, penalties if you don't pay on time. So just know that you're not actually paying the appraisal district. They are setting the values and you are paying the tax assessor collector and they are not setting the values. So sometimes that causes confusion when you're calling up and asking questions. You end up in the wrong section and you end up having to get transferred or call back and getting a long hold wait time, right? That's happened to me multiple times because I don't know how my question applies typically and which category it falls under because maybe it's a nuanced question. Now, those are the county level people who set the values and who collect the tax. But what about these different taxing authorities? What do I mean by that? So there's different organizations or entities that have different tax rates that all add up to your total tax rate. So common taxing authorities are going to be straight up your county. It's going to be cities. Your school district is always typically your biggest percent of your tax bill. Municipal utility districts, which we'll talk about later, and I've talked about in other videos related to Morningstar. You have public improvement districts or PIDs, that relates to Walsh. You have your county hospital districts. You have your emergency services like fire and EMS, and you have your college districts and sometimes other specialty districts. So each one of these different taxing authorities has its own small tax rate. And so when I talk about a total tax rate, that's everything combined. It's really not typically very useful to reference a specific tax rate. We just want to know the total tax rate for a home, and that's accumulative of all of the different taxing authorities. So that's what we'll be covering at the end of the video, is that because of these different taxing authorities, You can have different tax rates depending on where you fall in Aledo ISD. So stick around to the end of the video and I'm gonna tell you the exact tax rates from highest to lowest in all the different parts of Aledo. Okay, now how do we actually calculate your tax bill? So what you're gonna do is you're gonna take the tax rate, which we're gonna cover later, and you're gonna take your assessed value, not your market value, and you're gonna multiply them. And that gives you your tax bill for a property. Let's actually do an example of how to calculate your tax bill. So in this example, your home has a $500,000 market value per the county. It has a $400,000 assessed value per the county, and you have a 2% tax rate, which nobody actually does, but we're gonna cover that later in the video. So in this scenario, totally disregard your market value. $500,000, throw it out the window. Take your $400,000 assessed value and apply your 2% tax rate. That's gonna give you a tax bill of $8,000. Now that is the basic formula to figure out what your taxes are gonna be in Texas. But in reality, it's a lot more complicated than that because we have a handful of different tax exemptions that you could qualify for to offset some of those taxes. So we're gonna get into exemptions next. Okay, well, let's jump straight into the most common exemption in Texas, and that's gonna be the general homestead exemption. So that's going to apply to anybody who lived in the home as their primary residence as of January 1 of any given year. Now, you only have to apply one time. Currently, at some point might start like reconfirming these things after a few years, but currently you apply the first year you qualify and you don't have to reapply at all. What the homestead exemption does, it does two things primarily. One, it reduces the assessed value of the school portion of your taxes by $100,000. So if your home has an assessed value of $400,000, all of those different taxing authorities I mentioned previously, all their little individual tax rates get applied to $400,000. Well, the school portion, which is almost always the largest portion of your property taxes, in Aledo it's definitely the largest, it's like 1.2%. That line item, so rather than 1.2%, the school rate being applied to $400,000, it gets applied to $300,000. So the assessed value as it impacts school taxes is reduced by $100,000, which makes figuring out the exact tax bill to expect for you kind of convoluted because some taxing authorities will also give you that homestead benefit even though they're not required to. Like the school districts are required by state law to do that $100,000 deduction. The other taxing authorities are not required, but some do. Most in Parker County don't, but if you ended up buying somewhere else in Texas, that would be something to note that you might get additional benefit from that. So that's good. That's a minor reduction in your taxes as a whole, which is always beneficial. One of the bigger benefits is the cap on your assessed value going up. That's going to be one of the biggest benefits. So if you have the homestead exemption and property values are rising fast, the most increase that can be applied to the assessed value of your home is a 10% increase. So let's do some really basic math. Let's say your home has a market value of $500 per the county, and let's say the current assessed value is $400. So this is not related to the homestead exemption like discount in any way. It's just the current assessed value is $400, but they think the market value is $500 this year. So that's set for this year. Cool. Well, let's say the market explodes, and this happened in 2021 going into 2022 before everything stalled, but let's say there's a 20% increase in property values. So your market value goes from $500,000 to $600,000. That's a big jump. Well, what can they do with your assessed value that was at $400? The most they can increase the assessed value if you have your homestead protection in place is 10%. So you'd go from a $400,000 to $440,000. So that's pretty cool. That's a big benefit, especially when home values are rising fast. Because while yes, the counties typically try to adjust everything well, if you've lived in an area for a long time, sometimes you're gonna see they don't actually go to 10%, even though they could sometimes. And when the markets really explode, they can still only go 10%. So that's happened on my home where I'm undervalued, quote unquote, on the assessed value, and I have seen a 10% increase in my assessed value year over year. Next one that is really good to know about is if you are older or qualify for an over 65 homestead exemption, that is actually going to permanently freeze the school portion of your taxes. So even though your assessed value will continue to rise, and you're still gonna get that 10% cap protection for your general homestead exemption, is the school portion will not rise anymore at all. Now, if you come in and you buy a home that's already kind of assessed at market rate, that over 65 exemption doesn't reduce your school taxes, significantly. It freezes it where it's at so that they can't continue to rise. Again, that's still a pretty big benefit because the school portion is the largest percentage of your property taxes. So that's one important one to note. And then on the veteran side, so if you're a veteran and you have any classification or disability rating, I think is the correct way to say it. So if the VA has given you a disability rating, that rating, 10, 20, 40, 50, 75, 100%, is going to get applied to your property taxes in Texas. So I have a couple of clients that for varying reasons, they have 100% disability rating, right? Sometimes that's from traumatic brain injuries, sometimes that's from back injuries. And so they're just like, hey, no, they're basically disabled, even though like they can fully walk, they work out, like all that's there. But for whatever reason, they're able to qualify for, 80, 90, 100% disability rating. That applies to their property taxes. And so since Texas has such high property taxes, if you have a high disability rating, that can actually increase your purchasing power significantly because of how your DTI is impacted. You remove all the liability for property taxes, that gives you a lot more purchasing power. Or don't increase your purchase and just save a lot of money on property taxes. But that's important to note. You will need to, provide like documentation for that, but that's a really strong benefit for veterans in Texas if they have any sort of disability rating. So the last thing I want to talk about, which is going to be very situational and not a whole lot of people are going to qualify for, but is always of interest, especially if you want more than just 2 or 3 acres. So Texas oftentimes has, and this isn't the legal term for this, but everyone calls it this, ag exemptions. So if you have large amounts of land, you can get an agricultural exemption for that land if you're using it for like an allowable or for a qualified reason. So the easiest way to do that is by using honeybees. And they don't even have to be your honeybees. You can actually have someone else keeping their honeybees on your land if it's used for like business purposes. And because your land's being used for that purpose, you can get the ag exemption. Now you can also do your own bees, right? But there's requirements to meet these agricultural exemptions. So one, you have to have a certain amount of land. Bees are the easiest because they only require 5 acres. If you're gonna do like cattle or something, it's 10 or more, something like that. But the other thing, so it's like 5 acres for honeybees, but they need all 5 acres to be honeybees. And if you have your home on that property, they're gonna say generally, if you have 5 acres of land, at least one's for your house. Now there's only 4 for the honeybees and you don't qualify. So you really kind of need like 6 acres if you want to qualify with something like honeybees, because they're going to carve 1 acre out for your homestead and then the other 5 acres for the honeybees, which means you're still paying full property taxes on the 1 acre, but the other 4 acres, you have drastically reduced property taxes, because in like Aledo, an acre is going to sell for $130,000 to $170,000. So you buy 5 of those, that's a tax rate of $700,000 to $900,000, something like that. So you could reduce your tax liability from $12,000 or $15,000 down to a couple $100 a year. So ag exemptions are great if you want that land. You do have to qualify for it, and there's only certain ways to do that. So those are the most common exemptions that you're going to see in Texas. There may be a few others here and there that you could potentially qualify based on specific scenarios, but I wanted to cover the 4 most common or 4 most interesting for most people. Okay, now if you want to know the most expensive tax rate in the Aledo area, stick around to the end of the video because we have a couple more things related to your exemptions and your property taxes coming up first. Okay, now before we get into paying your property taxes, let's talk about how to keep those taxes as low as possible. So we're going to talk about filing for your exemptions and protesting your taxes. Now in Texas, you do actually have to file for any of those exemptions I just listed. So for your general homestead exemption, filing for that is really as simple as filling out like a 1-page form and sending it to the appraisal district. Some appraisal districts will actually let you fill it out online and submit it. I don't think Parker County is there yet, but they might be soon. So always look for that. It just makes it more simple. Now, one important note is you can't just buy your house and then immediately go file. You will have to update your driver's license or your government IDs to have that address on your ID. So if you buy a home with a partner or a spouse or whatever that is, and you're both on title, you will both need to have your IDs updated and send in a copy of your IDs with that exemption form. And that's gonna kind of cover across the board. And then if you are in the same home and you already have your homestead exemption and you turn 65 and qualify for the over 65 homestead exemption, and now on this one, only one of you, so if it's a husband and wife own the home, only one of you has to be 65, as long as you're on title, to qualify for that over 65. So even though you're already living in the home and you already have the general homestead exemption, it is not the same exemption that gives added benefits. It's a separate exemption, so you have to apply for that as well. Really, it's normally just filing a piece of paper with the county. You print it off from the county. I should have a link for that below if you want to see like that homestead exemption. Maybe you just moved here already and your agent didn't tell you about that. Use this link. Put a comment below, let me know if you need help. Happy to help with that. And an important note, so if you did, maybe you previously moved to Texas, maybe you moved here a year or two ago, you weren't able to find someone like me who knew what they were doing, but you got a home, you're happy, you're excited, but you have no idea what this homestead thing I'm talking about is. You're like, what is all this stuff Jared has been talking about? I need to file for this. The good news is that you can actually retroactively apply your homestead exemption. I believe it's a full 2 years back. So now, I actually have a story from a client of mine who, they're good long-term friends. So before I got licensed, they had bought a home, right? They bought it from somebody else. Well, when I got licensed, as a benefit to my friends and clients, I started checking to make sure everyone had their homestead exemptions filed. And I reached out to these friends and I said, hey, I don't think you have a homestead exemption on your home that you've been in for a couple of years. You should probably file that for the benefits that we've discussed in this video, right? So they were actually able to retroactively file it for 2 years prior. Because they'd been in the home long enough, that actually meant that they had overpaid on their taxes 2 years. And they actually got a check cut back to them from the county for the overpayment of their taxes. So pretty cool. It's not the end of the world if you have overpaid the last couple of years. I actually have another interesting story of this, is I have a client who was actively selling the home that they had bought with me. And now I had reminded them and they did, Jared, we both thought the other one of us was gonna do it. We never did it. Now we're selling our house. Is there even a reason to file our homestead exemption? Can we file it now that we're actively under contract to sell our house? This was super interesting. I don't know if all assessing authorities will do this, but even though they had closed on their house and sold it, they were able to apply their homestead exemption because it had been their homestead, and they were able to get a check back from the county as well, even though they no longer owned that home. So pretty interesting. If you have not filed it, it is not too late. Make sure you apply that for as far back as you legally can so that you might get a check cut back to you from the overpayment in your taxes. Now, protesting your taxes. So every year around April, maybe March, you're gonna get a notice of what the county is saying that your new market value is and if they're increasing your assessed value. And you're gonna wanna take a look at that and say, does this seem reasonable? And even if it is reasonable, it might be worth trying to fight. And now one thing to note is that the way some counties work is really you can only fight the market value, and sometimes they're pretty accurate. So if their market value puts you at 450 and you look around and all your neighbors and for the same size homes are selling for 500, you probably don't want to fight that because your market value is below what other homes are actually selling for. If it's about even, maybe you try and fight it by finding all the bad things about your home and making a case that your home really isn't worth what the market might say it's worth because of all the work you have to put into it, that a buyer wouldn't buy my house because I have $10,000 of work over here, $10,000 worth of work over here. Maybe your neighbor has a bunch of junkers in their driveway, like, hey, this is a negative impact to the value of my home is my neighbor. Like, this is terrible. So there's a bunch of ways that you can fight your market value and keep it low. And it is important to keep the market value low, even though you're not taxed on the market value like we've spoken about, because if the market value is above the assessed value, they will always try to bring the assessed value as close to market value as they can. Now you do have that cap, but like on my home, I got a smoking deal, way undervalued, got it off market. So my market value is way higher than my assessed value. So the last 2 years in a row, I've had a 10% jump in my assessed value, and I don't really have any way to fight that because the assessed value that they're taxing me on is still way below the market value. So something important to note, fight those market values as much as you can. If you are local and you need some help and you want me to help you with that, reach out directly, happy to assist. For any of you who are moving to the area, I do this for my clients at no charge. So if you ever needed help after the fact, you can always reach out and say, hey, can you take a look at this? Is it worth fighting? Can you get me some savings? Happy to help. Okay, now I do want to touch on how to pay your property taxes. And now this information really isn't specific to Texas or certainly not Aledo, but there's a couple of points in here that are really important as you are moving to the area, especially if you're considering new construction, or if maybe you're moving from an area and you're kind of bringing a lot of cash and you might be putting a lot down. So the most common way that your property taxes are paid is that they're included in your escrow payments with your mortgage. That being your PITI, principal, interest, taxes, and insurance. So if you put down less than 20% on a home and you're using a mortgage, they're going to require you to set up an escrow account, which is where you send your money monthly. Now, your property taxes are not actually paid monthly. So the lender holds on to your taxes that you're contributing on a monthly basis. And then when the tax bill comes out and the tax bill is due, they pay it on your behalf. So on one hand, that simplifies it for you. You pay it monthly, someone else makes that payment for you, but there is a downside to that. So very specifically on new construction, this can happen a lot, or if home values are rising a lot. So on new construction, you might buy your home, and because the assessed value, like we mentioned in previous videos, really isn't where it should be yet, the taxes don't show a full tax bill like you're gonna have in the first full year of owning the home. So the lender and the title company, and really it's the lender's regulations and how it gets set up. So they may not be collecting what your tax bill is really going to be. So maybe you buy at the beginning of a year, maybe February, the tax bill isn't out, the tax notices aren't out yet, and so the lender doesn't have a hard dollar amount to base that escrow payment that you should be making on. So they set it at something. Well, at the end of the year, the tax bill gets paid, and what happens if it's actually a lot more than what you have in your escrow account? And now let's use some really round math. Let's just pretend you end up being $2,400 short. So maybe you saved $5,000 based on those monthly payments, but the actual tax bill is $7,400. So there's a $2,400 shortage. What's gonna happen if the escrow account is responsible for paying all this? Do you get a free ride because someone set it up wrong for you? Nope, not at all. It's actually way worse. So the escrow account, the escrow company is actually gonna, one, send your $5,000 in, and then they're gonna cover the extra $2,400 temporarily. So what's gonna happen now? They've paid it on your behalf. They've also basically lent you the money to pay it. What's gonna happen is now they're gonna adjust your escrow payments. So you're gonna get a letter saying that there was an escrow shortage and there's gonna be an escrow adjustment. And so not only do you have to pay them back, they're gonna reset your payments so that they're collecting the right amount for the next year. So if you're $2,400 short, the easy math on that, this is why I use $2,400, is that's $200 a month. One, that they should have been collecting and they weren't, to make sure they have the full amount for the next year. Okay, so that's $200 a month to just make the correct amount. Well, the real problem comes into the fact you also have to pay them back $200 a month. So they've adjusted your payment to make the correct collection, and they're adjusting your payment further to pay them back. So your payment could go up $400 a month in this scenario. And now here, let's make it even worse a little bit, is if your property taxes go up again the next year, you could also have a double shortage. Now, your shortage should not be as extreme as that because you should have the homestead protection. You shouldn't have a huge swing, but any swing you get, you're gonna get double hit each year. So that's something to be concerned about when your taxes are being paid. So on new construction specifically, you need to make sure, if you're working with an agent or a lender, you need to talk with them about, well, what's my tax bill likely going to be? And if they're not collecting that in the escrow payment, you need to be setting that money aside on a monthly basis to make sure you can cover that full bill when it's due and you don't get double hit. So that's the first way your taxes can be paid. It's simple in one manner, but you do lose some control. And sometimes if you're not keeping a really sharp eye on it, you're kind of assuming that they're tracking it for you and they're really not proactively helping you. They're just collecting your money and sending the payment in. So the other way is that you can pay it yourself, like separately, but you really can only do that in certain scenarios. So one, if you own the home outright, there's no loan on it, right? Then there's nobody that's requiring payments. There's no escrow accounts. So you're gonna have to pay that when the tax bill is due. Or if you have more than 20% equity in your home, you can often get rid of your escrow account. That's what we did. We did not want an escrow account. So when we were able, we waived it. But what we do is we actually have to set aside our taxes and our insurance. We set that aside on a monthly basis, almost like an escrow account. We just put it into our own savings account as opposed to giving it into someone else's hands. And then when the tax bill comes out, typically in like October, we just make sure we get that check written and in, and it gets paid. So it's a tiny bit of extra work, but you get to keep a lot more control in your own hands. And now if you are over 65, you actually qualify to make payments on that. So I'm not over 65, obviously. I have to pay the full tax bill by the end of January. And if I don't, I get penalized. I have to pay extra. And it's kind of steep, like maybe like a 5% penalty, like if I miss it by a day. But if you're over 65, you can actually make your tax payments 50% in the first part of the year, 50% in the second part of the year. I think that's how it works. And one important note is that taxes are paid in arrears. So the taxes that I pay in January of 2025 are actually 2024 taxes. So I have had some older clients who were just saying, hey, well, I just made that final tax bill. You know, it's like October of, I think it was last year, it was October of 24. They said, hey, I make payments and I just made that final tax bill. I shouldn't have to pay taxes, or there shouldn't be a tax proration when I close on my home in October, November. And I had to explain to them that actually the taxes that they were paying in 2024 were 2023 taxes. And sometimes people just don't know that, and it's kind of a shock. You know, that's an extra $4,000 or $5,000 they're not getting at the close of their home. You know, and really I typically do net sheets with them, but I have to explain, no, like if the taxes you just paid are for the prior year, they're not for the current year, typically. So that's how taxes are paid, and we are about to hop into that long-awaited section of tax rates. Okay, we are finally to the long-awaited last section of this video where I'm going to be covering the different tax rates for different parts of the Aledo area. And now, as a reminder, why can these rates be different? Why are they different? What impacts them? And that's going to be the different taxing authorities. So if you have the exact same taxing authorities on a property, they're going to be the same. But you know, one city's taxing authority for the city, it might not charge the same rate as another city. You know, if you have a MUD or a PID, or if you know, Tarrant County versus Parker County, you're gonna have different charges or assessments for, you know, the different emergency services. So that's why there's gonna be so many different rates for different areas. So I'm gonna start at the most expensive tax rate and work my way down to the cheapest tax rate in the Aledo ISD area. And starting off with the most expensive, unfortunately, is also the most affordable new construction neighborhood, which is Morningstar. So the tax rate in Morningstar is a full 2.8%, which is high. That has a full 1% of that is the municipal utility district that got set up to provide utilities to Morningstar. So most expensive. Now the second most expensive is Walsh. And what I've said in some other videos was actually slightly off, and I'll tell you why. I thought that the PID for Walsh was included in the Fort Worth city taxes that were included on the tax statements. They are not, or it is not. The PID is not included in that. So the tax rate in Walsh for most people is not just like 2.37. You actually have to add the PID onto that, making the effective tax rate for almost everyone in Walsh 2.55%. Now, why do I say it that way? And it's because you can actually, you can pay the PID off. The PID will eventually be paid in full and come off of your tax liability. So I do have a client that planned to be there for a very long time, and he wanted to pay it off in advance so that he didn't have to pay the principal plus the interest on how it's financed. Because if you pay it over 30 years like they have it set up, you're gonna pay more than twice what the actual PID is. So for most people, when you buy into Walsh, your effective tax rate's gonna be like 2.55, but eventually you might get that down to like 2.37 when you get rid of the PID. So that's a lot of info, sorry about that. Now moving down to the next step is gonna be Willow Park. Willow Park's tax rate is 2.23% if you're living inside the city limits. That's gonna be your tax rate. And then we're gonna move to Aledo. So the Aledo city proper tax rate is 2.19. So a little bit cheaper than Willow Park. And now I do want to throw this in here and specifically just as a comparison for the neighborhoods, but Parks of Aledo, it falls inside the city limits of Aledo. So the tax rate in Parks of Aledo is gonna be 2.19 as well. So the cheapest tax rate, which I've mentioned in other videos, of all of the 3 big new construction neighborhoods that fall in that plus or minus the average price range of the Aledo area, right? So like Walsh is gonna be the most expensive, Parks of Aledo kind of really close to that average, and then Morningstar is gonna be on the less expensive end of the 3. Now, moving further down the list, and this is actually a pretty big jump, is moving to Hudson Oaks. So if you're inside the city limits of Hudson Oaks, your tax rate is only 1.8%, it's like almost 0.4, right? Different from the next one up. So that's really great. And then you go outside of city limits in Parker County, tax rate is 1.8%. Well, how come taxes inside Hudson Oaks and taxes outside city limits are the same, 1.8%? And that's in a video I did on Hudson Oaks, so you can go check that out. The city itself does not charge a tax for the city. So you're still paying all the other taxing authorities, but there's no city portion of property tax for homeowners. So that's pretty cool. Like you're gonna get access to like, you know, all the city stuff and utilities and all that's gonna be provided because they pay for like their city revenue. They get their city revenue from the businesses and like business taxes and sales taxes and stuff. So now you're down to like, I live outside city limits in Parker County, so my tax rate is 1.8%. That turns into a decent chunk of money as, you know, you do the math from earlier in the video, right? So what is the actual cheapest tax rate that you can get in the Aledo ISD area? And that is, you gotta meet all 3 of these criteria. So inside Aledo ISD, obviously, outside city limits, and in Tarrant County, not Parker County. So if you meet all that criteria, which is mostly like the Bella Flora area, it's hard to meet all of that, but that's gonna be 1.76. So, I mean, it's very minor, but it is technically the cheapest tax rate in all of Aledo ISD. Aledo ISD, outside the city, in Tarrant County, not Parker County. So that's it. That's a list of all the tax rates. Feel free to rewind, pause, whatever. Ask me a question. Let me know if you have any questions on that. Happy to explain that further to anyone or look specifically into where a home might be that you're interested in. Okay, so if you made it to the end, I covered a lot of technical information. And if this is your first time on the channel and maybe you want more information about neighborhoods and areas, that's normally what I'm talking about. Hit that subscribe button to make sure you get kept up to date about what's going on. And if you are thinking about moving to the Aledo area, whether it's next week or next year, let me know. All my contact information is in the description box below. I'd love to just start a conversation, hop on a Zoom call, have a text exchange, whatever is most convenient for you, because I love helping people move to an area that I live in and I love. So thanks for checking out the video, and I'll catch you next time.